Mark, I'll start with you. Lay out your increased bull case for Amazon here.
Right. So we've done these U.S. online retail surveys for 7 years. When we came out with this last year, we saw sort of, there was some concern there. We saw slipping satisfaction scores at Amazon. I think that's because they were aggressively mix shifting towards third-party vendors. And we saw what appeared to be a little bit of a plateauing of prime interest in the U.S. This year, both of those trends improved. And in the meantime, what we're seeing is, not surprisingly, the longer people are with Amazon, the longer they shop with them, the more frequently they shop with Amazon, and the more that they spend. Satisfaction levels improved modestly. Prime penetration really nicely jumped from last year. So we think the flywheels continue to spin at Amazon. We like the stock. We have for some time, but we like the stock. We've got new survey data behind it. And now what we're watching for is the next catalyst is the impact of this Prime one-day shipping on Amazon retail sales. It won't show up immediately, but we think over the next year there'll be a path to maybe some revenue growth acceleration because of that. So we like Amazon, the stock.
Yeah, I want to get into that piece of it, the shipping piece of it, logistics part of it, in just a little bit more in just a moment. But first, I want to get your thoughts on quality control on Amazon's e-commerce platform. And I ask that because I've had this happen multiple times in recent months where I've ordered something that was suggested to me by Amazon or a best-selling item. It comes to me and the quality is not great. Maybe it's a counterfeit product. Is this a growing risk for the platform right now?
I think it is, and I think that's why we saw 80% plus satisfaction levels amongst Amazon customers until last year when it kind of dropped down to 72%. We thought that was a cause of concern. Then it seemed to have moved back up a little bit this year. And there's clearly been a shift, as the company has reported, in unit sales that are going to third-party vendors, where Amazon doesn't necessarily control the pick, packing, and the shipping. And so, if it's fulfilled by Amazon, you can pretty much be guaranteed you're going to get that 2 days, next day, same day. But when you have third-party vendors involved, that's not the case. And so I think what Amazon's had to do is kind of clamp down a little bit and tighten up quality controls on some of those sellers. And if they're not up to snuff, kick them off the network. My guess is that that's what's really playing behind the scenes. But it is a risk for Amazon if they don't handle those third-party vendors correctly.
Dan, Synovus owns Amazon shares. What do you think of the company right now? I guess what do you see as the biggest risks as somebody who has shares?
Well, I agree with your other guests. I mean, we're very bullish on Amazon. We've talked about their, shipping capability, distribution capability. One of the reasons that we own the stock is because of their strength in AWS. As we all know, they're the leader in infrastructure as a cloud service. That drives about 55% operating margin. The other area that to me is very intriguing in terms of looking at those next legs of growth is the strength in their other revenue category, which is their advertising segment. That's been growing at a very fast pace, around 80–90%. So those areas are higher margin than their core, online retail business. The net margins are 5–6%. You're looking at much higher margins in those areas. So to me, that would be the next legs of growth for Amazon going forward on top of their huge marketplace presence.